You need to rise above the trading algorithm if you want to be successful in trading. Hello, ladies and gentlemen. Hello, friends. Hello, fellow traders. I'm back after the Tuesday letdown where I wasn't here. I was busy. Hope you guys are all well. Hope you guys are all here. Don't forget, trading's risky. Don't like risk. Shouldn't be trading. It's good to have you back again, guys. Been an interesting couple of days. Just having some coffee since it's coffee with Rob. I'm starting early. Hello, Elaine. Starting a little bit early just to get the show on the road. Mainly because, I wasn't here on Tuesday, so I kind of missed doing this. It does help, yeah. I enjoy doing this. So, yeah, here we go. So, my US 500 S&P 500 trade. What happened? What I did, I moved my stop loss up sort of into profit, $90 into profit to be exact, thinking that it would be pretty safe in that area. It seemed safe. And then I was really busy this week, as you know. I didn't have time to look at charts, watch anything, or do anything realistically. And when I looked again, it was up there and it had spiked me out of the trade. While it gave me $90, I was targeting a lot more. So now I'm waiting for a new entry, which hopefully we'll get down here and I'll get back into it and take the long trade on that. But what is working out, oddly enough, finally, is the one I took fundamentally is this United States dollar, South African rand. Let me just move this around. It's now $142 up, which is quite good. That's the only trade left here at the moment. Yeah, amazing actually. I did expect it to do well, and I'm still expecting it to do well. It's now broken past the prior highs, and it's moving to the upside, so it's on a breakout. It almost broke past that high, but it seems to have stuck there, and we'll see what happens. But I'd like it to go all the way and carry on up to upper levels. As I said, I don't see why the South African rand should have any strength whatsoever. It should be weak fundamentally. So I was quite surprised that it's gaining strength here against the United States dollar. Now, this has got a lot to do with the dollar as well and its turnaround and what have you, because, if you look at the euro US dollar, that's a big change as well. So I'm looking at this from a perspective of the rand should be weak, and with all this tariff stories going on and all this stuff in the markets, there really should be some movement on this. So we'll leave that and we'll hope for a big profit there in the near future. And if you look at the euro US dollar and what's happening here as well, how it's broken to the downside, but it is in that level, that range. So if it breaks below that red support level down there, then it's broken past the lows, and it could be quite tricky. It could go quite far. But as it stands at the moment, probably bounce off here and go back up the way things are in the market. So I don't see too much of a problem there. But yeah, if it goes far, it goes far. Yeah? The Nikkei kind of, it was still short this morning, and I'm looking at this and thinking, there's a bit of a break of structure there, so it could be going long again. Well, we'll see. We'll see what happens there. I know a guy is trading on the 5-minute chart. He claims to be successful. You see, the trouble with the 5-minute chart is I can do a whole experiment here on the 5-minute chart. We did do it recently, and everybody said, nah, don't do it. Let's stay with what we know. So I've stuck to the 4 hours. And the reason I do the 4 hours is that so that I can actually walk away and leave it and whatnot and just take the trades, because it's just going to work out the same way. But the trouble with the 5-minute charts is if you trade on the 5 minutes, you kind of end up scalping. So it's easy to show some kind of success with it. The trouble with that is only 1% of the market, 1% of traders, and this has been proven with tests. It took pro traders to actually get this result. Only 1% of people that trade on 5-minute charts are successful. Now, the reason for that is the fear, the mentality, and the psychology behind it. To be a 5-minute trader means you've got to really be a high stakes trader. which means you've got to be able to handle the high stakes, because there's no point in investing less than what you would invest in the 4-hour chart and the 5-minute chart if that's your trading plan. So if you're going to invest the same amount, you're investing it on a very, very tight level. So for example, you're risking it now on 10 points instead of 100 or 200 points. And you can't really call which way the market's going to go. So what happens is you call it, you win 7 trades and it looks good and you look successful. Maybe you're successful for quite a while, but what inevitably ends up happening with the 5-minute trader is somewhere down the line it goes pear-shaped. And if you speak to any 5-minute trader who's truthful, they'll tell you that they've blown a number of accounts. And that's generally where it goes with 5-minute traders. So, you know, if they're not truthful, then they'll probably tell you they're just straightforward profitable and they're just making money every day and so on. There are only 1 or 2 traders that I know that can possibly trade those 5-minute charts successfully, that are perhaps on YouTube or out there or showing you that they can do it. But it's proven that only 1% can be successful there. So why do we think as retail traders that we can somehow take on pros and whatnot? It doesn't make sense. I've tried it, I've done it, and I didn't blow any accounts. I didn't go bankrupt from it because I still stuck to my principles while doing it. But by the same token, I struggled to get ahead with it, because for every 5, 6, 7 trades that you're successful with, there's always that one that whacks you. Because when it moves, when the price moves, it moves extremely fast. And you know, a good example of this would be, it's difficult to explain to you guys, but look at this 4-hour chart. Look at that S&P 500 yesterday that knocked me out of the trade in a profit. I mean, I didn't lose, but it still spiked me out of a trade. Now, imagine that on a 5-minute chart. Now, you've been making profit all the way along here, and you've been doing quite well on your 5-minute chart, and you're trading the 5-minute charts with the same risk levels, and this happens. That's going to be one huge move. If you don't have an auto stop loss in, probably going to get taken out. So that would be possibly even a blown account. You don't have some kind of auto stop loss in. And the trouble is, when you're putting auto stop losses in, like we do on the 4-hour charts, effectively what you're doing is you're advertising your sale. You're advertising, for example, you go to a shop and you see a notice on the front door that says sale 50% off everything at this price. That's what you're doing when you put your order in. You're advertising your sale price. So it's not like there's some little robot or AI or algorithm. I say you've got to rise above the algorithm, guys. There's no such thing as an algorithm searching out your stop loss. There are human beings out there that are looking for stock to buy. You know, that's us, all of us. We're all looking for stock to buy. And you're advertising your stock at a set price, so why shouldn't I be allowed to buy it? You put it there. You said, I'll sell it at $5. And I said, I'll buy that. I'll pay that. I'll pay that for your stock. There's nothing wrong with that. I didn't search out your stop loss. You advertised your price to me and I paid it. So, you know, stop thinking robot algorithm and that as well. But yeah, look, I don't say that you can't make money out of 5-minute trading. There are 1 or 2 people that can. All I say is the odds are against you. The odds are severely stacked against you. And they've proven over and over again that really 99% of people will lose trying to trade those 5-minute charts, because just the way they move. You can try it, give it a go and see how you go. If it's for you, you'll know. But bear in mind, what I find whenever I trade the 5-minute or the 1-minute charts, what I find in my personal capacity is I'll do quite well for a short while, and then there'll be 1 or 2 trades that just whack you. And that's where it goes. I'm going to sell Euro US dollar. That's actually an excellent trade, the sell for the Euro US dollar. Florida, greetings there, Florida. Nick, from my experience, the lower the time frame, the more active you have to be successful with long-term charts. you can set it, forget it for a while. That's exactly it, Nick. That's the whole point is most of the older traders, like myself, calling myself old, but I've been in the market for 33 years, and most of us have gravitated away from trying to trade on 5-minute charts, and most of us have gravitated towards 4-hour, day, weekly, whatever the case, because we realize you don't want to sit here and try and make money out of 5-minute charts. And the presumption is most of the day traders will presume that they're going to be profitable every single day. And they'll say, I'm going to come in, I'm going to trade the 5-minute charts, I'm going to trade for 2 hours, I'm going to make $200, and that's me for the day. It might be 2,000, it might be 20, I don't know, but let's just say $200. And then they come in and they don't make $200, they lose $400, and then you see the presumption, we all assume things. We're very presumptuous to come in and think that we're actually going to win because we're so good, we're going to win. So I'm going to trade for 2 hours and I make $200. I'm going to go and sit on the beach. When that doesn't happen, suddenly your plan's turned upside down. Well, you don't really have a plan because you didn't have a plan B if you lost. This is normally what happens. And that type, you see, this is where it comes in as well. When the guys are saying, I'm always successful at it, they don't show you the times when they're not successful. And my strategy is not on the lines, as you know. These are just high probability trades, the lines. We take trades on the lines, we all do. But my strategy is about trying to win more on the wins and lose less on the losses. That's what my strategy is. It's not about the lines. The lines don't matter to me that much. They're just there they're a useful tool to take a trade and to manage your risk. But when it comes to actually making the profit, that's a different strategy. That's a different plan. And, day traders don't see it that way. Day traders, or 5-minute traders, let's call them, are more into the charts. More into the charts will make you the money, and the win rate will make you money. Win rates will never make you money. Charts will never be able to predict the future. They'll be able to tell you where the market's going, what it's been, what it's doing, but they won't be able to predict the future of where things are going to go and what's going to happen. Only the person behind these doors and whatnot know these things. I will finally actually catch you live again. I'm here. How's it, Bruman? The beers will run free. Very few have extensive active money management skills to be successful trading the 5-minute chart. Yeah, that's true, Nick. I agree. Bitcoin shall rise 150 next. I kind of agree with you, Bruman. I think Bitcoin will get to 150 next. It does certainly look that way. If you look at it, it certainly looks like it's going to go for it. I'd like to see it break up past this range. It's sitting in that range now. It's kind of found another level. But yeah, it's finding these levels. It's going and it's sitting and it's going and it's sitting and it's going. So that it should resolve to the upside. So I don't know what that was, but something fell. I totally agree with you there, Bruman. That sounds pretty fair to me. Wonder what fell. Okay. I love 5-minute and 15-minute. Sir Lunchalot, you're back. I haven't seen you for a while. I love Sir Lunchalot's name. That's the best name on the group. But yeah. The reason you love the 5-minute and the 15-minute chart, just my opinion, is because you don't have to be patient, because you can actually do something, actually trade. The insane thing about trading is, as addictive as it is and as fun as it is and as much as you enjoy it, it's boring. It's boring and it's lonely. And when it becomes boring and lonely, what you tend to do is you tend to look for other things to do. One of the first things is drop to the 5-minute charts and keep yourself busy, because there's something moving on the screen. There's something to do. There was a stage I went through where I didn't have anything on the side going on. And I literally, you may find this funny, but I literally started playing games on the side, on the computers and things like that, to keep myself busy. But yeah, to be fair, I always find something to do. Now it's YouTube, keeps me busy now. I enjoy it. Keeps me busy, keeps my mind occupied. But that's simply because I don't have any other businesses running at the moment as well. I think I'll just stick with this at my age. But, at the end of the day, it's boring. And if it's not boring, then you're probably doing that, going down to the 5-minute charts, 15-minute charts, trying to make it exciting, trying to keep your life exciting. You see, my other thing is if you do only come in and trade for 2 hours a day, let's say, to try and make that $200, the next question is, once you're finished with that 2 hours, what are you going to do for the rest of the day? Are you going to sit around? Are you going to do nothing? Are you going to become an alcoholic? I don't know. You've got to keep your mind occupied. You've got to keep yourself busy. Otherwise, it's just going to become insanely difficult for you. Keep that in mind. It's a difficult thing. Most people get involved in those lower time frames because of boredom. Hey, lunch. Yeah, I rarely win, but I am profitable. My God. You see, the whole point, Brewman, is you don't need to win a lot. You just need to be profitable at the end of the day. And there's always that trade that'll pay off somewhere down the line. I thought it would be the S&P this week, even though I wasn't here. Now, that's the other thing about trading 4 hours, guys. I mean, okay, I lost concentration this week. I had some emergency things to take care of. The wife had to go to hospital, stuff like that. Now, that takes your mind off the game. You're kind of like, oh, your mind's not in it. And that's why we didn't do a live show on Tuesday. My mind wasn't in that either. But this carries on. And being on the 4 hour or the day charts or anything like that, this carries on. This can carry on in the background. You don't have to be sitting there watching it. Yes, the S&P did catch me out with that spike, and it took out my rolling trailing stop loss, but I didn't lose. I mean, it still gave me $90 back, but I was expecting it to go all the way to 6,600 and make me the money. So now I'm looking for a new entry. So that's the only downside to it. But on the upside, I could leave it in the background, not worry about it, not concentrate on it, and know that it's taking its time. But with the 5 minutes, I've got to be there every day, and I've got to be watching the charts all day. And that's where the difference comes in. I'm able to leave it behind. I'm able to walk away from it, and I'm able to come back at a later time and see what's happened without stressing about it. When I was trading on lower time frames, 5 minute, 15 minute, 1 minute, I found myself waking up at 2 o'clock in the morning to check trades because something was going on in Australia, or something was going on in New Zealand, or some result, or some news. Those were the times when I used to hang my hat on the news as well. And that can affect your health at the end of the day, because firstly, I was probably over-traded because I was trading on those time frames, which means I was risking large sums of money on lower amounts, on smaller movements. And that is that, it affects your health because your psyche is not comfortable with that sort of scenario. So yeah, if you're going to get involved in the lower time frames, do be careful of how it affects you. I don't say you're definitely going to lose doing that. If you hold up the strategy and you stick to a good strategy, you can do it. But like I say, it's more work. And we as traders are inherently, most of us are lazy people. That's why we do this. We let the money work for us. We don't work. Dum 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 dum. Here I come. Yeah, no, all good, Kevin. Thanks, Bruman and Kevin. All good. No, everything's fine. That was just something that needed to be sorted out. But yeah, I was off. What I'm pointing out with that is clearly my mind was somewhere else. It wasn't here, and it doesn't matter if you do this, if you do it properly, and if you do it on a slower basis, and you take your time. It will run in the background. Those are the types of jobs you want to create for yourself. Once or twice I had retail stores. And even though I had staff and people working for me, it was like owning or being in prison, because if I didn't check up on it, if I didn't open and close the doors, if I didn't check what's going on, I mean, the most difficult one was when I had 2 stores in different areas. I had to like sort both of them out at the end of the day, run between them and that sort of thing. It's a prison to try and do something like that, and then still you want to invest and trade and that. Rather look for jobs where the stuff can run in the background and you're not affected by it so badly, and it'll still be there when you come back. And you don't need tons of people and staff and salaries and that type of thing. Always keep that in mind. It's a good way to think when you're trying to make money. Traders are all alike. We're all in the game to try and make money. We like to have it, but obviously we enjoy doing it. Obviously, you've got to enjoy computers and things like that as well, or maths, or whatever. But or maybe it's a gambler in us or something. I don't know, but there's something in us that is pretty much the same. We all enjoy this type of environment, and we do it at the end of the day, try and make money. That's what it's all about. But we enjoy doing it, don't we? Val says, after a loss, I try to stop for a day to prevent making it a bigger loss. That is one of my my big things. And I mentioned it in many of my earlier videos, and this is how I've always traded for many, 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 many years, or a long time anyway, is if I take 3 losses in a row, especially in one particular day, I will stop trading. I will just stop, walk away, come back tomorrow, and then I'll just relook the situation tomorrow. Am I ready? Am I comfortable? And if my mindset is correct, then I'll get back in. If not, I'll wait another day. Sometimes when you're on a losing streak, it's a good thing just to stand back, just rethink the whole scenario, and just get your mindset right. Because 9 times out of 10, it's your mindset that's causing it. And what it does help is it stops you from revenge trading. Revenge trading is a really big problem. And revenge trading can be as simple as this, where the S&P 500 spikes you out. It's supposed to go up, so you immediately get back in. It's not a revenge trade as such, but you want to stay in the trade. You didn't really want to get out, and you got out, and you get back in, but you get back in at the wrong time, and it carries on going down, which can happen. Whereas now, you see, being comfortable with it, I'm just like, okay, I'll just wait for another opportunity, and I'll wait for the real trade, the opportunistic trade. I won't just get back in for the sake of it. And that's important when you're trading, is to not just jump back in and revenge and whatnot. Sit back, wait for the next trade. Even if it's on the same instrument, wait for the next trade. Be patient. Say, oh, there'll be another opportunity, and I'll take it. And I'll take the next opportunity. For example, I missed Brent crude oil because of this week. And I wasn't watching, and I was waiting for this. As you guys know, I've been waiting for this move. And I was waiting for it to break that level. I was ready to buy it, and like, okay, I'm going to buy this. I'm going to get in. And then, of course, this week happened, and I walked away. And I come back and look, and it's all the way up there already. I'm thinking, oh, goodness me. Now, even this morning, I was thinking I should actually get in here. But then I thought, nah, you know what? Let me wait for it just to slack off a bit. And then I'll look at a new entry and see if I can get back in on the trend. Patience. Just wait a little bit. Wait for that perfect entry. Wait for that good entry. And the way I would look at Brent crude oil is, if I got in there now, where would my stop loss be? My stop loss would be over here. You know what? Wait for it to get there, where your stop loss would be, and then buy it there. 9 times out of 10, that's going to work for you. I've got a question. If the trend is your friend, should we not let price action tell us when to close the position instead of using a profit target? The reason you put a profit target in, you don't have to, but the reason you put a profit target in is because that's part of your strategy and part of your plan. You don't have to put it there. You really don't. And let me be perfectly clear about a profit target. You see, you work out, the most important thing is you work out your risk, you work out your stop loss, and the stop loss is the same on every single trade. Now you've worked that out. The reason I put a profit target in is because I want to be sure that I'm making more on the win than I am on the loss. Now, I don't have to have that profit target in there. I can take it out, because what I'm going to do is when this price gets right up to there, I'm actually going to move the profit target away and put my stop loss right up behind it anyway. So unless I'm not watching, like in this week's case, last few days, if I'm not watching, it takes it out, so be it, then I make my profit. But if I am watching, I'm going to move that profit target away. I'm not going to take profit there. So based on that and that alone, you don't have to put a profit target in, but have one in mind. Have an idea that you're going to make more profit than you're going to take loss. Have an idea of where your profit's going to be, because a man without a plan is not going to be successful. If you don't have any plan, if you're just throwing darts at it and saying, well, I'm taking the trade here and somewhere down the line I'm going to make a profit, then you're in trouble. Then you're in trouble because you don't have the exact plan as to where you want to make the profit. I don't know how to put that in a better perspective, but it's important to have a small strategy and a small plan, because that's what makes you the money. Most people lose money in the stock market, the Forex market, the commodity market, and every single market under the sun, futures, whatever the case. Most people lose because they do not have a strategy and because they do not have a plan, because they think that the charts are going to make them the money. Charts cannot predict the future. They cannot make you money. They can just provide you with an entry into the trade. They can provide you with a high probability, and they can provide you an opportunity to manage your risk, but they're not going to make you money. Win rates don't make you money. The only thing that makes you money is a strategy and a business plan. So now, if you don't have some idea of where your trade's going to end, then you don't have a plan. And if you don't have a plan, that's where things go wrong. So yes, the other thing is, when we talk about trend is your friend, and I say to you guys, the trend is your friend, but that's not the only way we trade. Remember, the trend is not the only way we trade. The trend is your friend. We trade with the trend, but we also counter trade, and we trade in a range. So for example, gold is in a range. So when it's at the top, we sell. When it's at the bottom, we buy. When it's at the top, we sell. When it's at the bottom, we buy. At the moment, gold is a buy. I'm just waiting for one extra little bit of confirmation. If it breaks through that trend resistance, break out, then it's changed direction, and we're going to counter trade it, and we're going to buy it. So there's three ways that we trade. We trade the counter trend. The counter trend is very good. If it breaks through that, that's a counter trend. It's really good. But then the trend is your friend, but the range is also your friend. So we trade those three ways. We don't only trade with the trend. Remember that. Now, most people will say you can only trade with the trend, but that's wrong. You counter trade a trend, you're going to make good money. There's nothing wrong with buying something at the bottom that's oversold, for example, and then it breaks its trend of being oversold and it's going to start recovering the other way. There's money to be made there, lots of money to be made there, because the supermarket mentality will tell you that you're actually buying it cheap, effectively. So yes, we trade with the trend, and the trend makes you a lot of money, but also counter trading trends also makes you money if you do it right. So don't get caught up in only trading with the trend. You don't have to do that. Where was I? Brisbane. Good to see you. Welcome. A lot of people lose because they have a market bias. Yeah, that's also true. Diane, yeah, good. I'm glad that helps. If there's any more questions, feel free. And just remember, guys, this is really important. There are no stupid questions, okay? Unless they're cynical questions or nasty or something like that, that's different. But no, but if you're asking a question, there are no stupid questions. Every single question is valid, because a question depends on what stage of your journey you're on. So if it's your first day trading, the guys that have been trading for 2 years will think, what a silly question. But the guy who's just started for the first day, it's the most important question of the lot. So you have to understand, guys, that when a person asks a question, any question, it's just as important as anybody else's question, depending on where that person is in the stage in their journey. And it's really important to know that. So ask any question that you like. I don't mind answering them. And we do try to help where we can. I can't answer every question. I am not a genius. I can only provide you with the information that I've acquired over many years and how it's worked for me. And what I'm trying to get across for you guys is you can learn from my mistakes. I've made insane amounts of mistakes, and anyone who says they didn't is lying to you, okay? Because this is a tough game. And, I didn't have that mentor, that person guiding me away from those mistakes, or even when I did, when there was an older guy telling me to do something, like I'm an older guy telling people to do something, what to do, I would say, no, you're talking rubbish. That's not gonna. This is the way to do it, and I do it my way, and then that doesn't work, and you learn from those mistakes. Why didn't I listen to that old man? When you should have. So experience gives you a lot of information, and if you can learn from my downfalls and my mistakes through my career, then perhaps it will help you and it'll give you a boost ahead, rather than throwing the money away and losing the money at the end of the day. Because the one thing that you figure out along the journey, and this is something you will never believe when you start out, maybe in the first couple of years you will never believe it, but you realize that it's a 50-50 game. It's whatever trade you take, it can either go up or it can go down. There's no guarantee, or there's no, it's going to go up 60%. Definitely I've got a 60%. There's no such thing. It's 50-50. Go either way. It's dependent on a number of factors. Trading is not dependent on one factor or one small thing. It's dependent on so many different factors, and you don't have your pulse on all of them. Nobody does. So yeah, that's okay. That's why after a loss I try to stop from that renting. Okay. Good evening, Maru. Good to have you. Good to see you on board, man. Nick says, I know a lot of people are still losing because the stock market's high and they have a bearish bias. This is actually something that happens, and the stock market can remain in its position much longer than you can remain solvent. The thing is, The Big Short. Remember the movie The Big Short? That's a classic example of that bias that Nick is talking about. But if you've got the financial capability to hold that drawdown, then yeah, you can go with it. You can say, well, at some stage or another, there's going to be a correction. It's a bit like trading the VIX. At some stage or another, there's going to be a move, and when that move happens, I'm in and I'm getting my move. Now, the point of that bearish move is if you get into the market at a really high level before that happens, then because bearish markets are really quick, they fall fast. It's like the long trades, they climb the wall of worry, and the short trades slide down the hill. And it happens so fast that it's really difficult to get into them. So if you're in before they happen, then clearly that's where the money is made. So that's why guys do that. But to do that, you've really got to be flush. You've got to have the money to do it. You've got to have the backing to be able to do that. So holding a bias on a market is not for the retail trader. Holding a bias on the market is not for the normal person, because you won't have that kind of money to hold it 9 times out of 10. So you just trade the simple way, and that is trade with a trend, counter trade or trade in the range, and keep your stop loss, and then everything will be fine. But if you try to hold a bias on the market, then that's not going to work for you. For example, the S&P 500 again, okay? I'm not holding a bias here. I'm simply saying that the S&P 500 is bullish. And as long as it remains bullish and it's in trend, I'm bullish. I'm staying with it. I'm not going to have a bias here that says it's going to go short. I do have a bias that says it will probably reach 6,600. I do have that bias. But I will only buy it again. I mean, after I got taken out, of course. I will only buy it again once I have a good buy. When I can see, like, okay, this looks like reasonable. This looks like I need to enter again. And then I'll take my trade. I won't hold bias on trades. Apart from, I do get married to certain trades like this United States dollar, South African rand. I got married to this trade based on fundamental reasons. That you might do that. That can be considered a bias as well, but it's a reasonable bias. I call it reasonable because it's my bias, but it's a reasonable bias and it's worked out. For me, fundamentally, for the rand to be this strong is just insane down here. So for me, it's a long trade all day long, or short trade on the rand, but a long trade on the dollar against the rand. And that was, for me, fundamentally the way to go. It could still go against me, but for me, it's the way to go. It's the way to go on that particular product. But that's not a bias based on, oh, the market's at the top and it's going to fall down. You've got to be very careful of overbought, oversold situations, or the supermarket mentality, as I say. If something is expensive in the market, it's going to get more expensive. And if something is cheap in the market, it's going to get cheaper. If it's cheap, it means it's rubbish. If it's good, it means it's good. It's not like the supermarket where if it's expensive, you don't want to buy it. You wait for a special. It's not like that. There are no specials in the stock market. Not at all. You can buy, but you'll buy at the price they want. Hey, Shane, good to see you again. Good to have you on board, man. Could you explain the benefits of trading in the 4-hour time frame? The benefits of trading in the 4-hour time frame, very simple. And that is, number one, you get loads of time to yourself. In other words, you don't have to sit looking at the charts all day. But the main benefit is this. Let's use this as an example because we have a trade open here. The main benefit is this. The amount of room that you've got to make your profit without sitting watching the charts all day. And the amount of room that you've got for loss. You see, when you put a stop loss in place and you've got a specific amount of stop loss, and you're trading on the 4-hour charts, you can put your stop loss in a very safe area where the chances of it getting there are pretty remote. And also, it's going to take a really long time for it to get there if it gets there. And if it is getting there, something's seriously wrong with the trade and it's time to get out. Whereas on a 5-minute chart, if you're trading with a stop loss, you're trading on a very, very fine margin, a very, very small movement. And if that movement takes place, you'll get taken out for literally no reason at all. You see, on the 5-minute charts, the information that you've got on every single candle is very weak. It's only valid for 5 minutes. And the information you've got on a 4-hour chart is for 4 hours, or a day is for a whole day. So that information is pretty strong. So equate it to this. Let's say you're launching a new product, a really new product, a great product, and you want to know how good it is. So you take 5 people and you put them in a room and you tell them, check out my product. I'm going to start a $1 million company and I want to know how good that you think this is. And they come out and 3 of them say to you, it's great. Boy, it's perfect. And 2 of them say it's a load of rubbish. Are you going to start your $1 million company on that tomorrow? Because if you're trading on the 4-hour chart or a day, equate it to this. If I was going to start my $1 million company tomorrow and I wanted to know how good my product is, then I would put 1,000 people in a hall and say to them, check out my product and tell me what you think. 800 of them come back to you and say, it's pretty good. And 200 of them are sort of iffy and say, nah, it's not that great. Now there is information. Now I've got strong base, strong information. I can start my company. That is equated to, if you're trading on a 4-hour chart, you're trading on a 5-minute chart. The 5-minute charts are like having the 5 people in a room telling you, yeah, it's great. The 4-hour charts are like having the 1,000 people in a hall telling you it's good. You got better information, better results, better things to trade with. There's a big advantage with trading with higher time frames. There's a lot. You see, every candle is not a candle. It's people, it's traders, it's money. Stop seeing the market as charts and start seeing the market as human beings. Picture all those human beings standing together. Picture them all standing together. Now picture the 5-minute chart. There's only 5 people standing there. Picture the 4-hour chart. There's maybe 400 people standing there. There's a big difference in the crowd. And they're all trading. And they're all buying. And if the candle's green, that means those 400 people are buying. Whereas on the 5-minute chart, if the candle's green, that means those 5 people are buying. But there might be another 395 that are about to sell. The advantage of the higher time frame. Now, if you go to the weekly and you go to the monthly, you're going to get better information, but you really are going to wait forever. It does take longer to get your profits. It does take longer to get your trades through, and you have to be patient. That's the that's the most difficult thing to do, isn't it? Be patient. But yeah, that's the advantage of trading on the higher time frames. I found you this weekend, and I agree so much about the business plan and strategy. Electrician. Pretty sure your name's not electrician, but I'll call you electrician. But yeah, no, it's pretty much, that's how the world revolves around trading, and most people don't know this. Most people don't understand it. Most people won't agree with it in the beginning, and it's difficult to get your head around because everyone tells you that the charts are going to make you money. Very difficult for people to get their head around the fact that you need strategy to make the money, not charts. Charts give you the trade. They help you to choose your trade. They help you to put your risk in. They can't predict the future. You need a strategy to make money. And yeah, thanks for joining us. I hope you are part of the club here and you'll join us for the Tuesday shows as well. Diane, you deleted your message. It's fine. Brewman, call him Sparky. That's it. We're changing your channel name to Sparky. I agree H4 is the hour to go. However, when you need a daily wage and if you are disciplined, you need 5-minute time frame. Now, this is where the problem comes in, Sparky. This is where the problem comes in, okay? You need money. This is a big issue in the markets. I see it all the time. And I want to talk about it a little bit because too many people get dragged into the markets with very little money, with a belief that they're going to make lots of money because someone told them that. The issue is this: you start to get this desperation. I need money today. I need money today. I can't wait. I can't be impatient. You see, the reality of trading is just like a business. If you're going to start a factory, you're going to need capital. If you're going to start a shop, you're going to need capital, a really good amount of capital. For some other reason, when I want to start a trading business, I don't need any capital. I can just start with $1,000 or $500 or $100. And this is where the downfall is. Now, we all know that with $1,000, you're not going to make a living. And you think, well, maybe I can trade on the 5-minute time frames and turn that into 10,000 and quickly. But you're now looking at trying to make, 900% profit. And just think about what you're trying to do. Just think about that. Who makes that kind of profit? Who makes that kind of insane gain on their money? I mean, if you put your money in the bank and you put your money in a savings account, the best you could possibly negotiate on a good amount of money is maybe 10% if you're lucky. Here in this country, anyway, in some countries, nothing. If you invest in shares, and I've showed you this, guys, before, and you're patient, and you do what I've been doing for many years, and you add every month, and you just keep on growing the share portfolio, you can look at 30-40% per annum. It's not bad, if you do well, and you get dividends and all the rest of it, and what have you. So there's good money to be made in investing. But you talking about going onto 5-minute charts and possibly making not only a 900% profit, probably a 1,800% gain. Wow. Just think about that. Just think about what you're trying to do. And too many people out there tell you that you can do this. And it's not really that easy. It's difficult. I don't know many people who can do it. And you're really pushing against the waves. I don't know. There's a lot of that. And then the other problem that you come out with is, let's say you do have some capital. If you're trying to make money, let's say on a daily basis, a weekly basis, you see, when you work for yourself, we all know the buck stops here, and at the end of the month, you've got bills to pay. And what I always say is the best way to get into trading with that sort of scenario is rather have a capital amount for a year, with a plan B for year 2, just in case year 1 goes pear-shaped, and then work off that income, or that money, that income, whatever the case, to support yourself and try and grow your account for the following year on the rest of the money. Okay. Now, if you need to trade for today, and if you need to trade for the end of this month or the end of this week, it's going to affect your trading negatively, because what's going to happen is psychologically the fear is going to be worse than ever. It's going to be up a notch. It's going to be much higher. It's going to be huge. The fear becomes worse because you can't lose. You need to win. You need to pay the bills at the end of the month. The psychology is insane because you need to pay the bills. You start making mistakes, and then you start going into the red, and it starts becoming a problem. And then the stress levels go up. It's going to affect your trading very negatively, unless you're the calmest person on earth and you're somehow disconnected from the world and you're able to do this. So if you need the money now, today, and that's the reason you're trading on 5-minute time frames, the reason you're going to suffer is because your psychology is going to hurt you. It's going to take you up a notch on fear. And when you're not making the money, it's going to give you problems. You're going to start revenge trading. You're going to start taking trades. You start forcing trades instead of letting the trades come to you. There's a whole number of factors that are going to affect your trading adversely. It's not great, but I understand it. I understand it that not everybody's got tons of money just floating around and what have you, but a lot of people will just start trading with no money based on the fact that someone told them it's a great idea, and insanely, it's really not. Oh, well, perhaps I found a crystal ball for SPX. 2002 fib levels, high to low. Predicted this year's crash, 200%, 61.45, and we got to 61.7. Okay. Good show, Mr. Sparky, joining the club. Good. How are the new fibs from this year? The overlapping levels at 65061. Is the RAND chart showing a double bottom formation? That's a good question. I haven't even looked at that. Yep, you do have a double bottom formation. Yeah, totally. I didn't even look at that. I just looked at it as being in that range and bouncing up. But yeah, you got a double bottom there. Huh. Pretty much. But look at that. So you got that come down, down, double bottom formation. There you go. Well spotted, Nayan. Well spotted. Yeah. You know, I don't look for everything. I do see patterns quite often, but I really didn't even look for that. And there you go. That's a double bottom formation. Well done. Yeah. Glad you spotted that. The way I traded was basically off the support. Basically, it's broken structure, moved to the upside. And now it's gone past the prior high, which is what I was waiting for as well. So I'm hoping with that, looking at that as well. There's a lot of things you can look at in trading that'll give you your directions. But yeah, well spotted. That is a double bottom. Yeah. Now with new fibs from this year. Okay. Become one with the AI. Yeah, look, algorithms are not searching out your stop loss, guys. Just remember that. There's no such thing. We all think about AI, computers, algorithms, because we've got computers now. Computers are lekker. They're great. I love computers. Well, sometimes I'm busy fixing one of my laptops here, which decided to gone into automatic repair mode, and it's not getting out of it because the hard drive overfilled, and trying to fix that too. I've got plenty of those. It's fine. But yeah, it's insane actually that people think that algorithms are chasing their stop losses. That's just not the case. It's human beings. Human beings get into the market. Now you can imagine a company that wants to buy a certain stock or a certain product. They're looking for that sale. They're looking for that money, and they're looking for someone who's selling, and that's you. You've advertised it. You've said, "I'll sell it to you at that price," and you put it out there. And if you've put it out there, it's not their fault that you put it out there. They're happy that you put it out there. I'm like, okay, I'll go and buy that. There you go. That's all it is. It's human beings. The sooner that everyone gets their mind around the fact that it's not lines, it's not robots, that's human beings. Even behind those algorithms that you talk about, algos and whatnot, there's human beings behind that. If someone designs a trading system that trades automatically for them, there's a human being behind it that trained it and that's trying to make a profit out of it. Where it goes pear-shaped is that little robot that is created there that's trading for him is trading on a certain specific set of rules. And if Donald Trump stands up and says, "Oh, I'm going to move things slightly to the left today," that little robot doesn't know that. And then it costs you money. So that can't be 100% successful either. And also you're basing your whole process on the algorithm is going to make you money off the charts. In other words, you believe that charts are going to make you a win rate and they're going to give you an edge and you're going to make money. So it takes out the basis that markets are actually 50-50, that markets are actually a little bit here and there. So that does, affect that. Hello, Blue. Blue Mango, I curse everyone when I have a bad trade. I blame everyone else. I mean, it couldn't possibly be me. But yeah, I get you. It's like this when I got spiked out on the S&P yesterday. I mean, I cursed this morning when I saw it. I was like, yeah, must be someone else that did that. Couldn't have been me. But yeah, I moved my stop loss there, and I didn't think about the fact that there might be some stupid news event that was going to cause a spike like that. And of course, it spiked. End of the day, it's my fault. Funny how we get caught up in that, though. And your first reaction is someone's doing that to me, That's trading. Somebody else's fault, isn't it? And Bruman just blames me. That's great. I love it. I got broad shoulders. I can take it. Let's have a look at the news. Let's see if I can find the news first, which should be, yeah, most likely it'll be that one. There we go. Let's go and have a look at the news. The news today. Trump knocks Canada as countries rush to strike trade deals. So the tariffs are back front and center. China summons NVIDIA to discuss H20 chip security risks. Khrushchev done so well on NVIDIA this year. You know, I don't know if you guys know, but obviously I have my investment account separate from my trading. And because the investments I work on a completely different basis. I buy, I set, and I forget. The only time I will move out of a stock, and I hardly even look at them. But when I do, if there's something going insanely pear-shaped with one of the companies, then I'll probably sell everything up and move it into another one. But further than that, I don't trade my investments. I just leave them. So yeah, NVIDIA is one of those that are just one of those shares, a 10-bagger, let's say. You know, it's one of those 10-baggers where you don't realize it, but it just goes and it just makes so much money. It was great. That's a good one. But I've showed you guys investing. I've showed you guys, I've done videos on that. And if you haven't watched my video on investing, go back and look for it. It's so important to know that. What investments can do for you and how much money they can make you over time. It's time in the market. If you time in the market, you can make a lot of money. Trading is a bit of fun. Trading can make you a bit of money and a lot of money. Investing makes you far more. Key Fed inflation gauge shows price increases accelerate. This dude's still got a job. I believe that Trumpy doesn't dig him that much. I don't know. Trump defends tariffs ahead of legal drama. Trump tariffs face legal jeopardy. Trump bashes Powell. As I just said to you, he doesn't like this guy. Yeah, lots going on. Microsoft eyes $4 trillion valuation as big tech release for more. The big news, oddly enough, I don't know, this weekend there was some quite big news with the earthquake. Or this week. And it's quite strange, really, that it hasn't affected the markets in any way, shape, or form. Everybody's quite relaxed about that. I thought that would have affected things a little bit, but no, everyone's quite set, you know. You know, what about aftershocks, things like that, tsunamis, what have you, that could occur and whatnot? Nobody even worried. Everything just kept going normally. You know, in the old days, things like that would have affected things quite insanely. In the old days, somebody said earthquake, market would have sold off. Okay, Rob, have you ever read Think in Bits? No, I haven't. I presume it's good, Blue. No, I haven't. Rumor, the Fed. Gotta love the Fed. Everything in the world of stock markets and trading is based on the USA. You guys should know that I know this because I was born in Scotland, but the stock market was invented by a Scotsman many years ago. But I believe he did it in Europe, somewhere in France or whatever. But yeah, the stock market was invented by some Scotsman. I don't know his name. Interesting. But yeah, the whole world bases all of this financial stuff on America and the US and the US dollar and the economy of America. And, you know, quite strange, really, how that works. That book helped a lot when I started the revenge trade and just to see each trade in a bigger picture. Yeah, that's actually, I agree with you there, Blue. You know, like if you can get away from revenge trading and that sort of thing, it'll definitely get you over the scenario. PayPal allows you to buy anything with crypto now. Just PayPal. I've got a PayPal, but you know, I really struggle with PayPal. To get the money to Africa is just, it's insane. Okay, if I could spend crypto on PayPal, that would be really helpful. I must figure that one out. I must look into that. I must definitely look into that because PayPal is one of the most annoying things for me here in Africa, because we have a situation where I can't have a routing account or a USA account, so it's got to be sent to me here, and its process is annoying. I've got to have a specific sort of bank account, and real annoying. So yeah, if I could use it with crypto, that would be great. Should be quite useful. But yeah, we're getting regulated heavily on that, and watching our crypto. That's a good short on Tesla for the Q2 earnings. Had to close it earlier when it bounced very hard afterwards. Lost the profit in another long trade in different stock. Dang. You know, you can trade stocks quite profitably, and I did for many, many years. But I don't trade stocks anymore. I just buy them and keep them, whether they go up or down. I just keep them and hold on to them forever. I just stopped trading them quite a number of years ago. And I only trade the indexes and the commodities and the Forex. And these days I dabble a little bit here and there in the crypto, but not much. Mostly on the Forex and the indexes. Forex and indexes are my favorites. And then, of course, the commodities I basically stick to Brent and gold. That's it. You know, I don't go into the other stuff because the liquidity is not really there. But yeah, before I even touched Forex, I only traded shares, and it's actually really easy to trade because you can calculate their value that much easier. You can follow the companies, you can understand the companies better as well, because you can look at their price to earnings ratio, you can look at their fundamentals, and you know, they're good or bad or whatever the case. And it actually makes for an easier trade. I must be fair, you know. But the reason I took it away from my trading is because it was interfering with my investing. And I don't want my investing to get interfered with. So I separated the two completely and ensured that I never trade an investment again. So that is now investments over there, trading over here, and I keep trading to very much these types of things. Because otherwise it kind of affects your whole psyche. The reason why I say this is because you can use dollars on crypto. USD is a crypto back with, yeah, no, totally. And the US dollar is better than the rand. You're totally right. Every opportunity I get where the rand is decent, I send money over to the US dollar account, and then I can buy shares with that money. And then when the rand weakens, then my portfolio just gains value. It's crazy, isn't it? It doesn't make sense, but yeah, you know, you make more profit that way. So every opportunity I get with strength of rand, I'll take money and I'll put it over there, excess money, put it over there in those US dollar portfolios. And then you can buy more shares over there offshore and what have you. And then the rand weakens again like this, which is what I love. And then obviously the portfolio has got more value. You gain that move on it as well. Yeah, you know, the big thing is you've got to catch it right. And I don't expect the rand to get really strong. You see, where I would fall short is if the rand was suddenly to get really strong and I've got all that money offshore. That would be disastrous. You know, like say the rand was suddenly to become 10 to 1 to the dollar, that would be difficult. You know, but I doubt it will happen. But if it did, that's a bit tricky because yeah, it's a lot to, you can't just bring it all back, and that would be a bit of a worry. But I doubt that's going to happen anytime soon. It would take a big change in politics, and I think I would see it coming for a mile, and there'd be plenty of time to move things around. But so I prefer to keep as much dosh as possible in US dollar rather than rand, because the rand, I don't see much future for it at the moment. So I prefer my money to be in dollars. Okay. Then everyone will be using digital dollars on the blockchain. I don't know if you've thought about this, Bruin, but I've thought about it, Bruin. And this is the thing that's got to me is why would they use Bitcoin? They could either take it over, which would be okay, that's fair, or they would create their own digital dollar, which is already there if you think about it, because whatever you purchase these days is done digitally. I mean, it's got to the point now where you use your watch to, well, I don't have one, but use your watch to purchase. My kids have got those Apple Watches. I can't be bothered. I haven't worn a watch since I was like 25 or something. I don't like wearing watches. I got a couple of beautiful watches packed away in the safe, and I've never worn them. And but anyway, yeah. So you can use your phone though, and you can take your mobile phone and you can purchase with it. It's digital money. So even though there's still cash available, it's effectively gone digital, and that's just one step away from the cash being removed. So effectively, all the money is now digital. But the thing is, a dollar and a rand and a yuan and all the rest of it, it's all based on some country's economy, and it's got some stability and it's got some asset value. Whereas actual Bitcoin doesn't have an asset value, it's just based on one trade against another. The question is, will the governments take over Bitcoin and take it over as their crypto, or will they create their own digital crypto sort of idea or their own digital currency, which is already effectively there? And or will there be one world currency, just one? Let's say they decide, no, okay, there might be more than one, there might be two, because I mean, I don't see the BRICS ever seeing eye to eye with NATO. That's an issue. You know, Russia, China, and those guys, USA, Britain, and those guys, and they're going to want their own currencies most likely. But let's say there was one currency around the world, one digital currency. That's another step that is a possibility. So, Brew, you know, I'm looking at all these possibilities that could go down, and they're all quite interesting. But the big thing that they want is to be able to regulate what we spend and where we spend it. And the way for them to do that is to convince everybody to go into their currency. So I can see that coming. And at the moment, they're trying to regulate the normal crypto that's on the go. Bull steer certificates with US stocks. Euro have the digital dollar coming out this year, backed by the blockchain. Yeah. You see, Brew, it's happening fast, but you see, they're going to get us into that, and then it's all regulated. They all got control. Now, imagine a future where they can actually see everywhere that you spend, every cent that you earn, everything in and out, where you are, what you're doing. That's the future. And yeah, whether you agree with it or not, or whether you agree that human beings need to be controlled or not, but that's the future. They're going to control every single penny and know exactly where every single penny goes. Now, there are some advantages to technology. For example, you know, cell phone is a good example of that, where, you know, somebody gets kidnapped or lost or whatever the case, you can find them just by tracing their phone, or, you know, in the future, something even more technological. So, you know, you've got some advantages to it, protecting people and keeping them safe and all the rest of it. And with a criminal world that we live in these days, maybe even preventing crime. But there are a lot of disadvantages to it as well. And so we have to look at both pictures, and it's a really difficult one to call. Yeah, Bruce, actually, no, I don't know. When you say blockchain is too slow, I've got to say that every time I've used crypto or had money transfer through or whatever the case, it's been rather fast. Maybe I don't have those billions. But yeah, it happens rather quickly. It's not too bad. Not too bad at all. Actually, Brew, the BTC was actually been relatively fast for me in most cases, but I must say most of the time I've had to transfer it to Ethereum or something like that to get it moved. A lot of people don't have BTC. I don't know why. But yeah, and there's been a few complicated transactions that I've had to do with people to get the money to me, and gosh, yeah, because some people are now using the TRX or whatever the case, and then not everybody has access to that. So then you have to convert it from that to something else. And that's expensive. It costs money to change these things around and move them about and what have you. There's a lot of costs involved in that. But yeah, look, crypto was never my thing, but you got to move with the times, though. What can you do? While it's there, we move with it and we use it. I'm not a big fan of it, but I like the idea behind it. Let me be honest. I like the idea of what it was put there for and everything, but I just don't trust it. Is all. Still, it'll take a while for me to trust it, I think. Yeah. It's more like, can it handle billions of transactions within a few milliseconds? Yeah, I don't know. It does take a little bit of time for money to move over sometimes, but then I'm sure a bank's not much better. I've had a few transactions even within the same bank between myself and another party, and the money doesn't just flash over. It is a bit of a delay. And there's Bitcoin pretty much, or what, crypto pretty much the same thing. There's a bit of a delay, but it goes over. It goes over quite quickly. Not too bad, but I'm not promoting crypto, that's for sure. As far as I'm concerned, if you're sitting with a lot of crypto, let's hope it doesn't all go pear-shaped anytime soon, because it can, and obviously it can, and that's always the big thing. Yeah. So just remember that system and strategy are different and not always the same. No, I did use Tron. I used the Tron, but there's a problem here in where I stay. You get the Tron here, okay, and then get it over to cash or get it into a bank account or spend it or whatever the case. So what I did was, I've got Tron, right? So then you have to use the Tron to pay to get it into Ethereum, to get it here, get it into cash or whatever, so you can use it. It's a roundabout way, but yeah, I use the Tron, but it still costs money. It still costs. It's not free. You got to pay for the Tron. The Tron works. Yeah, it does work. It's not instant, eh? Not instant. It takes a few secs. It does take a moment or two to go over. I'm going to have a look at the PayPal again and see what it's all about, and as far as the blockchain goes and that sort of stuff, because I haven't looked at it for a while, and or any different methods or whatever the case. I've tried a few times with different methods on there, and PayPal just irritated me. But PayPal works a lot better in the USA and Europe and that sort of thing. On my side, it's never been user-friendly, or it's user-friendly, but it's never been friendly to us as far as transfers and that sort of thing goes. I'll have a look into that, see what it's all about. There's a couple of things out there that you can use to move money around in the world and stuff like that, like Payoneer, all these different ones. But yeah, I didn't know that PayPal was going into the digital, crypto. No, but PayPal is a drag in South Africa. That's the thing, Blue. That's what I'm saying. It's a drag. It's a pain. We really struggle with PayPal here. I use different methods to bring money back into the country rather than PayPal, because PayPal drives me insane. I'm just looking at Bitcoin, and I'm looking at where it's going. You know, Brew, you called it this morning going to 150, but I think it really does need to break these levels over here. It seems to be sort of stuck in this level here. I wonder if it's actually going to go, if it's going to move or not. But yeah, it needs to break up, because I'd hate to see it break down again. There's a bit of a slope to the downside here. It just seems to be sort of falling over. We don't want it to fall over. You need it to break up if you want to get to that 150. But yeah, you could invest in it now. It's not going to make a hell of a difference between here and there. You know, you might make your money still. I'm looking at the gold and I'm thinking it's bounced off there. I'm waiting for it just to break through this level here. Might get a good buy on the gold here. And if you look at Brent crude oil, I know I missed that, but I'm looking at these levels here. You might just get a nice one down here around about 71. There might be a bit of a buy there. Looking at that as well. Keeping an eye on that. That looks decent. This one's insane. Euro, United States, dollar. That really took a knock, eh? And there's a big resistance here. If it goes below that red line, that's quite serious. That's quite serious. I'm just going to... I've only got the one position on this account at the moment. I'll get some new positions when these things come into play. You've got to be patient. You just got to wait for the positions to come. Once the positions come, you can grab them and get in. Blue, don't worry. If you've added to your short, look at this, okay? The big issue you've got is you've added to your short before that candle's closed. That candle hasn't closed yet. But you're not badly off, because if I look at the candle, it is pretty much, there's the sellers coming back in. There's a tail on the top, almost a hammer formation. The candle before it is an undecided candle. So in other words, big tail on the top, big tail at the bottom, little body in the middle. That's undecided. So the buyers and sellers were very undecided before this candle, but it does seem to be sort of tailing to the red side. But you see it's changing green and red. So it's still a sell, because it's below the resistance and it could come down. But what you've got to look at is this range here. I drew the green line at the top and I drew the red line at the bottom. And top, 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 bottom, bottom, bottom. So every time it hits the bottom here, it rejects the support and it rejects the level and it goes up. And the only reason I haven't taken the long trade yet is because I've drawn this in just to give me confirmation that it's going to the upside, because it could still be in the trend down. So you're not in trouble yet, but the minute that candle breaks to the upside through that trend resistance, you're going to have a long trade going up this way. Now, the reason I'm looking for the long trade is this. If you look at that, there's your risk to reward. There's your risk. There's your level at the bottom. There's your reward. It's a huge reward to the top side. That's what I'm looking at. And that's why I'm looking at this trade for a long trade, not a short trade. If I took a short trade here, my risk to reward is the wrong way around. And it could be quite tricky. So, yeah, you're not in trouble just yet. But if it breaks through that level, start to worry and look at your trade. It could be problematic. I would say I'm more to the long side than the short side. Although you were in the trend, there's this bottom here, this big support, and it keeps rejecting there. And that it rejected there, and it's gone up, it's bounced. And it's that bounce that's got me thinking, oh, could be a good long trade, but it just needs to confirm with a little bit of a move through there. And then you've got a nice long trade. So watch out for that. It's a bit like here on the Brent as well. We've got the levels here. It's broken through that level. So what we could be looking at here now, let me just remove these nasty looking things. You see it broke to the upside there. Now, I'm going to use this one instead of drawing a new one. On the short term, the very short term, is the long term is much further back. But on the short term, very short term, I'm seeing this level on Brent, and if it breaks through this, if it breaks through this support, then it's going short back down again. But if it bounces a green candle off here, we could have the long trade continuing up, and we've got quite a sharp, steep move to the upside. So keeping an eye on that as well. I use these little trend lines in between just to give me an idea of the breaks to which side it's going within the ranges. It really helps. It really helps to give you confirmation which way you're going. These little short-term trends, they tell you if it's going that way or not. Gives you an idea of what's happening. Just helps you draw a line in the sand. And I'm just looking at the tail on that candle there. That's a massive tail. Don't know why it tailed down now. But worried about that pincer top. That's not good. That's not good at all. But yeah, we'll leave that. Markets don't go up in straight lines. They also don't go down in straight lines. So all fine. Yeah, it does need a lot of money to move BTC, but I think there is a lot of money in there. People just keep on adding. I'm wondering if Bitcoin didn't perhaps move up because of the exchange traded funds that were added by these big banks. You know, Goldman Sachs, Morgan Stanley, all those guys. I'm just wondering if they didn't have some effect on the move with Bitcoin, but yeah, you're right. Bitcoin does need a lot of money to move it, but it moved a hell of a lot from 70,000 to 120,000. A lot of people made a lot of money, including my son. So, yeah, I actually wonder if it had something to do with those banks fundamentally. And if that's the case, it could pretty much stay where it is because, you know, I don't see any new banks coming in and opening exchange traded funds or anything like that or buying into it. So it could actually just be sort of the money spent, it's there and it's hanging around, and it could surprise everyone and go the other way. Just remember, the market tends to do that. Every market, doesn't matter if it's Bitcoin, gold, oil, US 500, whatever, they always tend to surprise you. You know, you think it's going a certain way and then it just turns against you. It always does that. Just trade what you see, yeah. Tron blockchain, which is the Telegram chain processed. Yeah, that's what I'm thinking. It's all the big players. So I'm thinking JP Morgan, BlackRock, Morgan Stanley. I think these guys are pushing it up. And that's the thing. For many years, I called crypto fresh air and I said it was a Ponzi scheme. And I still stand by that. I don't say it isn't. But what I do say now is it's too big to fail. So they're going to hold it up. And now that the banks are getting involved in it and all these different big players, that makes it a different ballgame altogether. Because you see, in the past, when I was saying these things, those people were not involved. Now suddenly all these institutions are getting involved in it. That makes it a different game. And it makes it too big to fail, and it gives it some basis. Because the people that you're trading with are people with substance. And it's starting to give it some kind of asset value, some kind of value. And it makes a difference now. It does make a difference. I got to say, for one, didn't expect that it would get to the size that it did. I didn't expect that the people or players that are involved would get involved. I didn't realize that would happen, but it did. They got involved, and crazy. Uh, doesn't wait for high price to go down, just buys at high prices. And then the question is with the markets, you got to ask yourself, what is a high price? There's a good example of that, the US 500, the S&P 500. What is a high price? Is this a high price? Because today, you look at the S&P 500, you say, oh, that looks expensive. Supermarket mentality. That looks expensive with bias. Nick said it earlier, people have bias on the markets. So then you sell it at 64.20 today. So, I'm selling it at 64.20 because I don't believe it's going to go much higher. Now, my personal belief from my side is that it will definitely reach 6,600 and it could even go to 7,000. But I'm calling this year 6,600. But let's say you're Michael Saylor and you say 64.20, I'm selling. What is high? Because it could have been down here at 59.46. You might have said 6,000, it's high. 6,000, I'm selling. And from 6,000 till now, it's raised another 420 points. So what's to say if you sell it now that it's not going to go another 600 points up to 7,000? There's nothing stopping it. So how can you call something expensive? How can you have a bias in the market that says it's going to go down? So in my opinion, that kind of trade is effectively like going to the roulette table and saying, ooh, black or red? Let's stick everything on red. That's it. That's what he's doing. That's effectively what he's doing. Any difference is with what he's doing is he's saying because it's so overbought, because it's weighted to such one-sidedness that it should, in all probability, probably correct and go the other way. That's what he's doing. The point is, where do you call it? Where do you call it? So it's very much a big gamble that he's taking. That's what it is. It's a sense of, I believe that this has just run too far, so it's going to go down. There's no technical analysis behind that. I don't think there is even analysis behind that. I know if you look at the markets over many years, over the last number of years, where the S&P has gone up, and it will show a couple of corrections, the 2008 and the 1997 or 1998, all the way back, okay? And you'll see those corrections, you'll see a pattern, and you'll think, ooh, it's showing a similar pattern now, perhaps. Does that necessarily mean that that's going to happen exactly as it did before? The markets can't predict the future. I mean, the charts can't predict the future. You can just look at them and think, it could happen, and somebody could base that kind of trade on that. It could also go pear-shaped because the markets are going up. So, the markets look pretty strong to me, and I wouldn't bet my life on that short. I certainly wouldn't. Not right now. It's not calling to me and saying, oh, I'm short right now. No, it's not calling to me at all. That's not to say that it won't happen tomorrow. But if it did, that guy's going to make a lot of money. Yeah. Crazy or the smartest man in the business? I think there are people out there with a certain kind of mentality. And I think that mentality is very much a risk-taking mentality, a gambling mentality. And I think that's more what it's about than anything else. And I'm throwing it all on red and we'll see what happens. It's kind of what it is. Either that or he knows something that we don't. You know, Nick, yeah, the big money prefers stocks over everything else. You're quite right. Bu- 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 People screaming, "Oh, season over!" and like cry wolf. That's why I mean, BTC will drop before the end of the year, which will drag him down. People are greedy; they will push the price up. Bookoff was right. Yeah, no, look, it's an interesting. Why is the DAX? The DAX is looking a bit negative here. I thought it would go all the way to the top here because it bounced off the bottom and it looked like it was going. And then the S&P was, but the S&P is looking a little, there's a few red candles there this afternoon, isn't it? I want to get back into the S&P after getting taken out here. And it's looking, maybe if it gets back to the support, I'll give it a go. I'm firmly convinced 6,600, perhaps even 7,000. I don't know if it'll reach 7,000 by the end of the year because we are halfway there. Good, because I mean, it's done quite a lot already this year. Yeah, I don't know, but I'll call 6,600, that's for sure. Definitely happy to call that. I'm just not sure of the 7,000, but I like the 7. I've been saying 7,000's definitely on the cards. Bitcoin, I'd like to say 150. Let's say this, Bitcoin. It's either going to end the year on 100 or 150. But that's a wide call, eh? But that's all I can call with Bitcoin. It's for me, it's got two ways to go because there's no fundamental basis behind it. The only way I can see this going, it's either ending on 100 or below, or it's ending on 150. And in all likelihood, in all probability, it'll probably go to 150. People are buying this thing. The only thing, like I said earlier, is the big money got involved in it and started playing in it. And that's probably what pushed it up. Is there any more big money? That's the question. Is there any more big money pushing it up? That's the question. Fundamentally. Technically, it looks good. Technically, it looks good. Doesn't look bad at all. But we'll see. I hope you all liked the video. Don't forget to drop your like. The like is good for our channel. And the like is a big bonus for the channel. Makes us look good in YouTube's eyes. Makes us super duper. You know, interesting one was the New Zealand dollar, US dollar I was looking at earlier. Where is it now? New Zealand dollar, US dollar. Yeah, I was looking at that. Look at that. That's an insane drop. It looks like it's broken to the downside. It did so well all the way up. Now it most certainly looks like it's breaking to the downside here. And yeah, I'm seeing some nasty looking levels here. Let me just draw a straight line in. Yeah, good trade developing here. And I'm just going to I like to make them red so I can see. I'm just lazy drawing lines in because I could draw all the blocks in and go to the day chart and whatnot. I'm just looking at what the levels are like. And that level is telling me if it goes below that red line, we're looking at probably a downside here. So, I mean, because there was some green going back up and it looked good, but there's a big tail and a couple of big red blocks all the way back down to here. Could be a retest and back up. I think if we get green ones from here, then we're going back up. But if it breaks down to the downside here, we've got a downside, a big downside. In fact, it could go all the way down to these levels at 55. Because look at that, set in the range, set in the range, set in the range. And it tried to break through here, try to break through here. Held there. Let's see what it does here. It's held there, held there, held there. It looks like if it breaks down, this could be a really good short trade. Keep an eye on that. Let's leave that one on rather than the US dollar, because if you pick up this trade, you've got a big level down here. Keep watching that one. You're expecting me to buy all the Bitcoin? Goodness me. The next day it'll go down to 50 and I'll be broke. It's not great. Yeah. I wish I could buy all the Bitcoin. Wonder how big is the Bitcoin at the moment? I don't know. I suppose the figure's too big to mention, eh? I mean, the total amount of Bitcoin, does anybody know the figure? Must be a huge amount of zeros on that. Can't imagine how big it must be. In value, that is. Total value against the dollar, because that's what it's valued against. Interesting. Don't sell, brew, because if you sell, then it will drop insanely. You'll make big bucks. You'll be like super rich. Brew, 21 million. Is that how much you would have made? Because that's not the size of Bitcoin, surely. The guy selling the pizza for BTC. Yeah, I know. Now there's a lot of money in there. Huge amount of money. Then it's Thursday, yeah. I tell you. Okay. So we missed the live show on Tuesday. That was my fault. But at least we got another one in today, and we're back next Tuesday for another good show. And I try and show you guys something in the market so you don't make all those mistakes. 21 million coins. Okay. So 21 million coins times $120,000. Yeah, I'm not even going to try and work that out. It's huge. Huge, 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 huge. I don't know how they came to the point that they would only ever make 21 million coins. I don't know how they worked that out. But yeah, it's good to have a finite amount because it stops it from getting out of control. But yeah. I know a couple of guys who did really well out of Bitcoin. Makes me look bad because I invested in shares and I did all right. But you know, these Bitcoin guys, yeah. You know, if you buy something at a few $1,000 and it goes up to 120,000, make you a lot of money. Make you a lot of money. Make you very, very wealthy overnight. And it's, you know, it's unfortunate because now if you buy it now at 120,000, even if it goes to 200,000, you're not on the same scale. You know, it's not as good. Some coins are lost forever. How do you lose coins? Oh, it's some people who don't have their. Yeah, that's also true. Yeah, that's true. Huh. Interesting. That is true. I lost. What TRC? I lost some TRC a while back. And it was quite a bit as well. It went to the wrong place. Yeah, so that's lying around somewhere in the market, just floating about. If you don't know 100% how it all works, then that's when you lose these coins, and there's no way to fix it. No way to fix it. You can't get it back. You can't return it. You can't do anything. And once it's out there, it's gone. Uh, my wife, do my seatbelts up. Yeah, it's Tron basically. Yeah, something like that. That's what do you call it? I get confused between the different abbreviations, but yeah, it's like the TR20 or TLC20 is used with in conjunction with Tron, and they sent it to the other one. I can't remember what the other one's called, which is dollar based, and that confused the issue, so lost a few coins. That happens, and you can never get it back. You can't fix it. It's like, you know, because they're both very similar in their name, and they say, oh, "I've got this coin for you, whatever." Do you think it's that? And then with US dollar, USDT, or whatever the case, and turns out to be Tron, and then goes to the wrong price. If you'd only told me that. Yeah, it becomes my fault. Yeah, you need to know which one it is. You need to know that it's the TRC type. Then you can do it through the Tron. Yeah. Hey. Some people in my street complaining that they lost all their power on my phone. Yeah, mine's still on, so I'm not worried. Yeah, no. I would cry so hard you will hear me in Canada if I lose 100 BTC. Yeah, that is a lot. That is quite a lot. I didn't lose that. I only lost a small amount. 100 BTC is a lot. I mean, I can't even remember how much it was, but it wasn't much in money either. Grand or something. It was 100 BTC. That's a lot of money. That's serious. That I would have been freaking out about. That's a totally bad one. Imagine. Yeah. If it was only 10 grand at the time, but if you had it now, it's quite a bit. Quite a bit now. I mean, even if it was 10 or 20 grand, it's a lot. But now it's, if you still had that 100 BTC, what would it be worth? It's be a lot more. That's quite a big loss still. And if it keeps going up, it gets even worse. Imagine when BTC is 200,000, you think, oh, I lost that 100 BTC. Yeah, that's quite expensive. Sorry, Brew. That's why your name's Brew. That's why you go down the pub. Become an alcoholic. Yeah, I'm surprised all the traders aren't alcoholics, don't you think? I think every trader should be an alcoholic. Get rid of the stress. Yeah, no. Crazy stuff. Yeah, I know. But if you got to put your losses behind you, and that's the big thing in the market. Interestingly enough, it's so important to put it behind you, because if you don't, it's going to affect you for the rest of your days. The losses, that is. Sometimes you take a big knock, or you lose an account, or whatever the case. That there are times when you just have to take those losses and just accept it and walk away from it, and don't ever think about it again, because they just sit on your mind, those big losses. They just sit there. bugging you. Totally. And you start calculating how much you should have had, could have had. No, you got to learn that you're going to lose in the market. Just let them go. Let them go. Yeah, those big knocks. Those big knocks are the worst. And if you don't let them go, yeah, it will eat away at you. It will always eat away at you. And there's been times, I tell you what. Stress relief. Surfing in Portugal, eh? Portugal. It's a good one. I like that. Keeps you happy. Keeps you going, at least. That's the big thing. Anyway, guys, it's been an interesting week for me. And after all the running around and up and down and what have you, it's actually tired me out a bit, to be fair. So I think I'm going to relax and go and make some nice dinner now and enjoy my evening. And I'm going to be on my way. It looks like the US dollar South African rand is going to keep on going. The S&P does appear to be going back down. So we'll wait and see what happens with that before we get back in. That's why I don't bounce back into trades. But we'll see what happens with that. I would like another re-entry there, though, because I do believe it will eventually go up. And I am waiting for the gold trade, and I am waiting for the Brent oil trade as well. But I'm not going to sit here looking at charts now. I'll have another look tomorrow and see what we're at, and take it from there. But I am going to pack it in and move on for the day now. Guys, it's been fun again. I enjoyed having the show again. As always, I love having this show. And I hope you guys enjoy being on the show and being with me. It's always great to see you guys. Always great to hear from you guys. How are you doing? And yeah, it's Rob's time for a nap. Yeah, it doesn't mean I'm old. It just means I've had a rough week. That's all it means. You guys are thinking, old man going for a nap. Yeah. No, not happening. Guys, thanks for watching. Keep your feet on the ground, reach for the sky, make lots of money, and I'll catch you on the rebound. Don't forget to come back and watch tomorrow's educational video, and I'll see you for the live show on Tuesday again. Thanks for watching, and thanks for being